So yeah, okay, let us start, guys. I'm sorry for delaying. So what is important, guys, it is not only analyzing the markets and being able to see direction. So after you are able to see that, okay, it's a downtrend and price is on my trend line, what matters, it is then timing your trades, timing your entries. Timing, it is the most crucial thing that we need to know as traders. Timing, because without timing there is nothing that you can make out of the trade. You will find yourself entering a trade, and immediately when you enter the buy, the trade just goes against you. You see, and after it goes against you, maybe it then continues to move in your direction. So this is something that we encounter as traders. It is something that we encounter. You find yourself buying here and price collapses against you, and then it moves on your favor, moving while you are already out, which is not something that is pleasing. So which makes us traders to lose confidence that I thought my strategy was working, but it's like my strategy is not working. But the problem is, did you really check very well that is the problem with your strategy, or it is with timing? So what I can tell you guys is that all of us here, if maybe you have more than 3 months in the industry, I think you have already read a lot of information about price action, technical analysis. And what I can tell you guys is that that information, it really works. So for the fact that you know about technical analysis, already you have an edge in the market. Already you have a working trading system. You have a system that is working. So for you, for the system to work efficiently for you, this is the key thing that you need to apply. Apart from risk management, because I've been speaking about the risk management. So apart from risk management, the other important thing, it is timing. It is timing. How to fix my audio settings? Can't hear anything. Oh, I really don't know how you can fix it, but it's just check them. Check the settings. You'll read English there. Let me write for you. Then you will then watch the rebroadcast. I will post it probably today. So when it comes to timing, guys, I will just give you simple information. There is this strategy that I posted yesterday, which brought a lot of you guys here. The strategy about volatility in the seas. So in that strategy, remember I said one thing, that you need to have a strategy that will detect the direction, and the strategy that, and also detect entry at the same time. So when it comes to entry, it doesn't stand alone. Entry, it also involves timing, because entry without timing, it will be the wrong entry. So for you to have a very good entry, it also involves timing. It also involves timing. So what you need to know, guys, is that in that particular strategy, I just made an example of the stochastic. I just added the stochastic. So meaning my stochastic was there not to show direction. It was not to show direction, but it was there to show an entry. Meaning if it is to show an entry, it also have to involve timing. So the reason I use oscillators for entries, it is because oscillators, I once told you guys that oscillators, they are leading indicators. Remember, we have lagging indicators and leading indicators. So oscillators are leading indicators, meaning they go before the price. There is where it says use audio device, allow that. Okay, thank you for helping. Thank you for helping that guy. Thank you for helping. Yeah, so you know that we have leading indicators and lagging indicators. So the reason I involved the stochastic there, it is because the stochastic, it's a leading indicators, meaning it will go before the actual price. So meaning it doesn't depend on the price. It actually leads the price, even if the price has not began going maybe all the way up, but the stochastic will begin to go up. Even if the price is still going down, the stochastic will continue to go up. Because why? It doesn't depend on price, it depends on itself. It's a leading indicator. So just to add more on that, on timing, so another thing that you need to know, there is an important secret that I once gave you guys, those who are old here, where I talk about transition, that before the market switches direction, if it was buyer's market, before it goes to the seller's market, we need to see this phase, in transition phase, where there is handing over. You see, so during that transition, that's the money spot. That's where you will, when you enter that position, that's where you will make money. So that's why even last week I told you about volume, where there is no spike, where the volume is very less, meaning there is no activity in the market. So that's where money is made. When you take a decision here, immediately when the volume spike, you're already in the money. When the volume spike, you are already in the money when you make the decision, while the volume is less. So I'm just trying to combine everything that I taught you guys, so that it can make a lot of sense. So I just want to take my chart here. I just want to check my chart. Let me check a good example. So let's take that one as an example. Where is it? Where are my drawing tools? Okay, they are hidden. Okay, let us take this scenario here, and let me just go to a lower time frame to check it clearly. So I just want to check it. Okay, there it is. But I hope we are still following, guys. It is very, very slow. The problem is that there is something that is happening on the background. I'm trying to save a video that I was making, so I will post it after this. So here is a very, very important example. So what you need to know here is that where is my drawing tool? Okay, is that when the price approached this level, or a lot of people, those who are trading support and resistance, what they've seen here, they saw this as something like, okay, price has now approached the resistance level, meaning at this point down here. So if you are not a trader who likes confirming things, a lot of people began to wait for a sell, or some of them, they started to sell, maybe even on this week. Because if you are to go on a lower time frame here, it is not one candle. Probably you'll see a red candle in between here, because this blue candle, it has a wick on top, so you'll see a red candle. So people can make conclusion that, okay, now prices approach a multi-confirmed resistance level, so I'm looking for a sell. But then the question is, did you sell at the right time? Or you are, or maybe you sold earlier or even late? So that's the question that we need to have. Did you sell in the right time? Did you enter in the right time? So I'm busy trying to admit people, and I'm also teaching you guys, so it's stressful. Okay, he is in. So a lot of people, they can see, I was talking about this tail, that this tail in a lower time frame, like the 5 minute, you'll see a red candle here, meaning it was a deception that, okay, now there is a red candle coming, and the red candle is coming in a very, very significant level. And other people, again, they begin to enter the market, maybe down here. And then if you enter the market here, meaning in this level here, what will save you? It is your stop loss. If you put your stop loss here, your stop loss was eaten here. You see, so what will save you? It is also your stop loss, meaning for your stop loss to be at the right position, you need to enter the trade at the right time. So if you enter the trade late, you will put your stop loss close and your stop loss will be eaten. So you need to enter the trade at the right time. So what is the right time? The right time, it is whereby we can now see clearly that those guys who are leading the market, in this case, where we can see clearly that these buyers are now dead, where we can see clearly that the buyers are now dead. They are no longer in the market. My drawing tool is making mistakes. So that's the right timing, where we can now say the buyers are now out of the market. So an example that we can make, let me try to clear the screen. So here, what you can see here, we can see that, okay, the market was pushing up in high momentum. So I'm happy because this information that I'm giving you guys, it's information that I've been repeating now and then. I'm just adding bit by bit so that you can understand. So if you are to see here, when it comes to momentum, remember we started momentum even from the beginning. You can see that there is a big candle. There is also a big candle, but the second candle, it is smaller than the previous candle. And the third candle, it is smaller than the second candle, this one. And then the other candle, it is smaller than the previous one, meaning as the price is going up, the buyers are decreasing in strength because the candles, they become smaller and smaller as the market is going up. So meaning they are decreasing in strength. Oh, please say, how can I get the volatility video? The volatility video is on my YouTube. You will see, I will also share its link. So meaning if the candles, they become smaller and smaller and smaller, it means that the momentum is dying. It means that the momentum is dying. So if the momentum is dying, it means that our buyers are getting tired and tired. See, I want you to see something. I want you to see something. Remember, we spot this as a very, very significant level. This. So a lot of people were going to say, if the price broke here, it is now a breakout. It is now a breakout. However, for us to say it's a breakout, remember I told you that we need to see the momentum going up so that we can say, now this can be a trusted breakout. But don't worry, those who are new, I will repeat this information. I think the next webinar, I will be teaching you about how to spot true and false breakouts. So a lot of people said it's a breakout here, and others, they sold here, others say it's a breakout here. So for us to say it's a breakout, because we understand as traders that a breakout, we need to see the buyers pushing even more aggressively for us to say it's a breakout. So if there is no aggressiveness, then we cannot say it's a breakout. So as the momentum was dying, and I want you guys to see clearly here, there is this big red candles which came here. There is something that I teach in my volatility index course. So those who are part of the course, I hope they will understand this. There is this thing that I taught. It's a candle pattern break. Remember, you guys have been telling you about pattern break, but this that I'm teaching, it's a candle pattern break, meaning the sequence of the candles being broken. So it is a part of the VIP information that I give in my course. So usually what I told those guys is that when you are trading, you have to look the sequence of candles. So this information will help you guys in indices, because indices, when they move, you will only see red candles going down, only red candles. And when it move up, you will see green candles, green candles, green candles, green candles. It's not actually like this, that it will be a mixture. So there is no mixture in most of the cases. So what I told them is that once you see, if there were green candles, big green candles following each other, going up, once you see a red candle collapsing all the way down, it means now the sequence is broken. So if the sequence is broken, it means that it should raise questions to you that now a reversal can come. Now the opposite direction can begin. So this candle sequence break here, it shows us that now something wrong is happening. We can see buyers decreasing in momentum, buyers decreasing in strength, and also this hanging man here, this reversal candle here. We can see it, and then boom, a sequence break. So this sequence break, it not actually tell you that, okay, now it is confirmed that sell. But this sequence break can confirm that because there is this hanging man. So let's say there was this pattern was not here. Oh, my chart just disappeared. Okay, there it goes. I wonder what was happening. And now it is frozen. Okay, so if there was no this reversal candle was not here, guys, it was not going to be a good sell. If you sell here, it was not going to be a good sell. But this reversal candle here, that hanging man or evening star, whatever you can call it, that candle which look like a cross, it is a reversal candle which confirmed that there is now a handing over. The buyers are now giving the price to the sellers. Remember, if the price is being handed over, it is not only handed over through a transition, and transition can also be in a form of a reversal candle, because a reversal candle is simply an exchange in strength or an exchange in momentum. So here, because we had this hanging man, it was a good sell to put it maybe after this red candle here. However, a very, very good confirmation, it is this one, whereby we see the market slowing down and suddenly becoming flat and then collapsing all the way down. And the way it was collapsing in accelerating momentum, meaning the momentum was going up. Look at here, there is a small candle and boom, a bigger candle, and boom, a biggest candle, meaning the sellers were promising, meaning the sellers were very promising. So it was very, very advisable and very, very good for us to continue with the sellers because they are promising. So I hope it is making sense, guys. Went on the microphone button on the phone. Okay, still it was that. But are we understanding, guys? It doesn't make sense when I will just be speaking, and I'm not sure if you are getting it. So is it making sense, guys? Is it making sense? Timing your entries. Make sure that you enter in the right time, and the right time, it is whereby it is clear that now the market is going the other direction. And remember, when I say it is clear, your clearness, it can be very, very late. Make sure that it is not late, because if once your grandmother can see it, once your father can see it, once your sister can see it, once your neighbor can see that now the market is going up, it is late. So it should be clear based on the secret information that you have. It should be clear based on that information, not clear based on what everyone else can now see. All the retail traders on Facebook, they are now posting buy. In that moment, it is usually late. So if you can raise any question, if you can have any question, you can ask. Because I wanted to give an opportunity. Because I've been speaking for 30 minutes. So if you have a question, you can ask. I don't want to give more information in one video, because you will not get anything out of it. Say, I have a question. Yes, if you have a question, ask. Okay, somebody ask, Immaculate ask, how do I know it's a sell? I think I was just explaining that one, that, or maybe I will have to go deep. So Daniel, you can ask. I think I will attend that first question. I will end with it. Is it always advisable to enter a sell or buy once a reversal candle is seen? Yes, it is very, very advisable, because you see, those primary things, guys, we don't have to neglect it. Remember when we first learned Forex, remember that candlestick patterns were our best friend. We were in love with candlestick patterns, engulfing patterns when we began to learn Forex. I hope you can agree with me. We were very, very in love with those things, and those are the basic, and we don't have to throw them away. So candlestick, it is a very, very good confirmation. However, it matters where that candlestick is. So the location of the candlestick, it matters. Where is it located? I can't even draw where, but you can read. So where is the candlestick located? So that's a very, very important thing. They are saying I'm left with 10 minutes, but it's fine because it's now a question. So it counts where the candlestick is located. So for an example, when a candlestick pattern is located maybe along this trend line, somewhere here, we know that it's a good confirmation. When it is located maybe here on this support level, we know that it's a good confirmation. You see, when it appears somewhere here on this resistance level, we know that it's a good confirmation. But if it's just hanging where there is no, like for an example, if it can appear maybe along this move, just ignoring this support here, if it can appear maybe along the move, it cannot be significant. Once I have confirmed through, I think we have to mute our microphones. Once I have confirmed through the candlestick, how do I determine how long should I hold the trade, or do I wait for another rejection? Mara guys, I've been trying to mute all of you. Okay, so how to see if I should hold or close, or maybe wait for another. So okay, holding a trade is basically based on the analysis. It's actually based on the analysis. And remember guys, like from last week going backwards, I think when I was sharing a signal, I was also writing a note like telling you that we are expecting what and the price is bouncing from where, and then we are going to do this and this. But this week I've not been doing that. I was just posting the picture, So what I want to give to you is that, okay, you need to first have your forecast. For an example, where is my drawing tool? For an example, let's say here you anticipate that price is going to push and break that level and bounce again and push all the way up, maybe seeing that it is now forming higher highs. So assuming that, okay, a breakout is going to happen on the upper side, as I've been teaching you guys, that if we see momentum going, it is likely that a breakout will happen on the upper side. Maybe let's say you analyze and say it is going to go all the way up, and maybe let's say you press a buy somewhere here where there is now a clear confirmation. Not now, let's say you press a buy somewhere there, and once you press the buy, you see the market going like this. So that's a trade that you need to look it with different eyes. That's a trade because this trade is no longer working as you anticipated. So a trade that is not working as you anticipated, it is a trade that requires you to come back again and look at the market in the perspective of the current move, this move that is new, and you analyze it. If you analyze this move and you see this move that it is likely that the market is going to go all the way down, then you have to close your buy. You see, you have to close your buy. Not even that the price have hit your stop loss or it has entered in the negative side, but as it is still here around your end, for the fact that you have reanalyzed because of the new position, the shift of the market, then that's where you can say, now I can't stay in this trade. This trade is no longer working. What is a question? What is your preference second confirmation indicators for currencies? Okay, a confirmation indicator for currencies, it can be the RSI and it can be the stochastic. So the oscillators, guys, don't neglect them. Don't do that mistake and say, I used stochastic when I was beginning and it is for beginners, it is not working. Put that price action and then confirm. Once you can understand pure price action, that's where you can now say indicators outside the window. You throw indicators away. But before you can understand pure price action, you can confirm with the indicators. Indicators were created to help us. And one thing, guys, you can check my courses. They are very, very significant. I just pour everything there. So I have 2 courses for Forex and for indices. So they are very, very helpful. So you can just go and check them out on my website. What is the preferable time frame to execute a trade? Okay, for a time frame, it also depends on your balance. There is someone who asked me that question today on WhatsApp, that which time frame should I use with a certain balance. He wanted to use a big time frame in a very, very small account trading indices. So if your account is very, very small, you should use smaller time frames, you see. And if you have time, so it also is determined by time and your account. How much do you have in your account? How much time do you have? If you open on a lower time frame, will you have the time to babysit the trade? If you have, let's say you have a small amount like $100, and you trade volatility 75 on 4-hour time frame, what are you expecting? Because when you trade with the 4-hour, you look at the market on the 4-hour perspective, meaning you'll be looking the market through the big movement, meaning you'll be looking it through the big movement. So if one candle moves against you, you will blow your entire $100 in synthetic indices. If one 4-hour candle move against you, you are done. So you rather go and check the 10-minute time frame. You rather go and check the 5-minute time frame. So it also depends on your time. How much time do you have? If you are a busy person, go to the higher time frames. So we have to wait for a close of a candlestick to enter the market. Say we anticipate a reversal on 4-hour. We have to wait for 4-hour candle to close. Yes. You have to wait for a candle close. And lately I've been also using the market sessions, like during the market opens. That's also what I've been using. So I think I will elaborate more in the next webinar. I think probably after tomorrow, meaning on Friday, I will elaborate more on that using sessions, because it also corresponds with candlestick close, market open. It also corresponds. So yeah, guys, you can go and check our website. There are beautiful courses there, and thank you for joining this webinar. So I love you guys, and I will post this video for you, and I will also be posting another video just after this webinar, a Q&A video about indices. So you'll get the link on Telegram, and just share that Telegram link, guys, so that a lot of people can join. So I just appreciate everyone for joining, and yeah, I love you guys. So please, can you briefly explain higher highs and higher lows? So yeah, but now I'm left with 2 minutes, so I will just note everything here, and I will just make sure that I do it next time when we meet. So next time when we meet, I think I will just allow you guys to post a question when we enter, and I address it. You post a question, I address it. It will be just your webinar. It will be your webinar. I'll be addressing what you want to know. It's a lagging indicator, but I remember it's a third confirmation. So I really don't know where that comes from. Okay, guys, we'll meet next time. Thank you so much. I love you all, and I wish you a very, very successful trading. So yeah, God bless you too. So think it's good night to those who are sleeping, and it's good morning to those who are very, very far from Africa. So thank you guys for joining. This is Pti Trading Institution.